Feeling overwhelmed by all the new tax changes? Well, you're not alone. Over the next few days, we're going to cut through the noise and zero in on exactly what small business owners need to know. No accounting jargon, just the updates that actually matter to you. So today we're breaking down two key areas of the new tax bill: bonus depreciation and R&D expense deductions. First up, bonus depreciation. The last few years have seen a steady decline in the percentage of cost eligible for accelerated depreciation in the first year. 80, 60, 40. Now, starting in 2025, eligible property placed into service can once again qualify for 100% depreciation. So think of it as being able to immediately write off the full cost of new equipment or property up front instead of spreading it out over several years. You can deduct the cost of the asset in the year it's put into use, even if you take a loan and pay that back over a few years. If you're considering big upgrades, your net after-tax cost just dropped significantly. Review some of the investments you had pushed off. The return on investment may be worth pulling the trigger now. Now let's move to R&D expenses. Great news for businesses investing in innovation. Domestic R&D expenses can now be fully expensed immediately. Previously, these expenditures had to be amortized over 5 years, which meant spreading the deductions out over time. With this change, you can now claim the full costs in the same year you spend them, but only for R&D conducted in the US. For R&D activities carried out overseas, the amortization period is still 15 years. So in 2025, you can file an automatic accounting method change with the IRS to start deducting the R&D expenses going forward. How about all the remaining R&D expenses that still need to be amortized from the last few years? Well, the tax bill gives you options on how to treat those costs. And accountants love options, and so should you, because options mean more room for tax planning to put you in the best spot. All businesses have the option to deduct the unamortized costs in 2025, or split between 2025 and 2026. Smaller businesses, defined as having less than 31 million in average receipts over the last 3 years, have an additional choice. You can now retroactively apply these new rules all the way back to 2022 if you elect to do so. You'll need to amend your past returns, but this is a great way to unlock savings sooner rather than later. You can also maximize the benefit of your R&D credit now that all of the expenses are currently deductible. So what should your next steps be for your R&D expenses? 1. Make sure to file a timely change in accounting method to use these new rules. 2. If retroactive options are available for you, consult your tax advisor about amending past returns for 2022 or later. 3. Review your R&D spending strategy if you held back in prior years due to adverse tax consequences. And 4. Check into the R&D credit. The eligible activities are broader than many people think, and the credit is much more valuable now that you can deduct your expenses annually. Be sure to stay tuned, because over the next few days, we'll be covering more changes in the new tax bill that could impact your business and an overall tax situation. Feel free to reach out if you have questions, or let us know if there's a topic you want us to cover. We're here to help it all make sense.